So if the West says gold's 2,000, but all of those countries say no, it's 12,000. Thank you very much. It's all going to flow that way, where they can arbitrage in the gold revaluation account. So what does it mean for gold? It's the only other tier one reserve asset in the world, and the most powerful players who know the playbook are not only buying it, but repatriating it, removing counterparty risk, the whole issue with the treasuries, pegging it to a new system that doesn't allow for sanctioning, confiscation, and doesn't have one unipolar currency that we all have to be beholden to. I think gold goes higher than anyone ever thinks possible. I think it never comes back down because it is pegged to a new system.
AndySchectman, CEO of Miles Franklin, has proposed an intriguing theory that central banks might be preparing for a significant revaluation of gold to bolster their balance sheets and offset mounting debt. This idea isn't without historical precedent. During the Great Depression, President Franklin D. Roosevelt implemented a two-phase gold policy. The second phase, beginning in October 1933, involved the deliberate devaluation of the dollar through authorized gold purchases at increasing prices by the Reconstruction Finance Corporation. This move was part of a broader strategy to stabilize the economy during challenging times. Similar practices were observed across many countries during the Great Depression and again in the late 20th century, as central banks adjusted their gold valuations in response to economic pressures. These historical examples support Schectman's speculation about a potential modern-day revaluation. Schectman suggests that gold might be integrated into a new financial system. This could lead to unprecedented gold prices, potentially shifting away from the current unipolar currency system and offering protection against sanctions and confiscation. Recent market movements support the notion of gold's increasing importance. In 2024, gold prices have been on a record-breaking streak. March saw prices hit an all-time high of $2,160 per ounce, only to be surpassed in April at $2,259. The rally continued, with gold soaring to $2,435 on May 20th, before settling around $2,300 in June. Just when it appeared the price had stabilized, gold surged again to a new record of $2,493 on July 17, 2024. This impressive rally can be attributed to various factors, including a flight to safety amid stubborn inflation, elevated interest rates, and heavy central bank purchases. The latter aligns with Schectman's theory about central banks' growing interest in gold. Please tune in for our exploration of AndySchectman's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
There's been a lot of talk lately of comments made by the head of the Dutch central bank. A balance sheet means assets balanced with liabilities, right? That's what it's supposed to mean. It's supposed to balance out. Gold, ironically enough, in all of the central banks is held in an account called the gold revaluation account. You have gold as an asset on this side and the revaluation account on the liability side matching it. So the rules of the central banks is that they cannot offset a liability with their gold holdings. And so they balance it out. You got the asset and the liability. It's the same amount of gold. It's in the revaluation account. Gold is valued on almost every central, first of all, every central bank holds it in the revaluation account, and all of the European central banks, gold is valued at $35 an ounce. It's still the Bretton Woods numbers. So the head of the Dutch central bank said, I know our balance sheet is turning negative, but we have 20 billion at today's prices in gold on the revaluation account, and even though we can't use it, it's nice to know it's there. My feeling is this: all of these countries, what did the BIS say? Gold's the only their tier one asset. All of these countries are buying gold. Who's behind Project Enbridge? Also the BIS. When all of the countries in 2017 started repatriating their gold, starting with the Bundesbank and Austria, Hungary, Turkey, Poland, Czech, Dutch, then the next year, 2018, they bought more gold as a group than they did in the 60 years previously combined, doubled that in 2019, and then mysteriously and ironically, the BIS said, oh, by the way, gold's now tier one. You don't think they knew? So what are we seeing now? All of the banks buying up all of the gold, repatriating their gold, and the BIS is involved in Enbridge. What did the Dutch National Bank guys say? Oh yeah, we have gold in the revaluation account. I know it's there, so I don't worry about my balance sheet. All of these countries who have been accumulating gold are also accumulating massive amounts of debt. So is it possible that we see all of the central banks involved in this revalue gold to a much higher level? To people who think that doesn't happen, it happened in 1933 when Roosevelt confiscated gold and devalued the dollar by 40%. After he confiscated all the gold, it means gold went up by 40%. But what if they put gold at a level 10,000? James Rickards is here telling people 27,000. Now your balance sheet goes from putrid to pristine, just like that. Now they pass a rule that they can offset each other now. And it's revalued to a much, much higher level. If you don't think that's possible, look what's happening in China right now. Silver right now is over $4 an ounce higher on Shanghai than it is in LBMA and COMEX. Slowly, 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 slowly jacking up the price and arbitraging everything that's over. The price is what people are willing to pay. So if the West says gold's 2,000, but all of those countries say no, it's 12,000. Thank you very much. It's all going to flow that way, where they can arbitrage in the gold revaluation account. So what does it mean for gold? It's the only other tier 1 reserve asset in the world, and the most powerful players who know the playbook are not only buying it, but repatriating it, removing counterparty risk, the whole issue with the treasuries, pegging it to a new system that doesn't allow for sanctioning, confiscation, and doesn't have one unipolar currency that we all have to be beholden to. I think gold goes higher than anyone ever thinks possible. I think it never comes back down because it is pegged to a new system. How high that is, I have no idea, but I would tell you much higher than people think possible. Be my truthful answer.
In recent years, the global financial landscape has undergone a subtle yet significant transformation, challenging the long-standing dominance of the US dollar. This shift is driven by a combination of factors, including the actions of emerging economic alliances and the perceived fragility of the US economy. The BRICS Economic Alliance has been at the forefront of discussions of alternatives to dollar-denominated trade. Russian President Vladimir Putin has proposed a particularly bold move, working with oil producers to eliminate the use of the US dollar in unilateral trade. This suggestion, if implemented, could have far-reaching consequences for the greenback's global standing. AndySchectman, a notable financial commentator, argues that we are already witnessing the twilight of dollar hegemony. He points to the increasing prevalence of international trade deals conducted in local currencies rather than dollars as evidence of this trend. This shift away from dollar-denominated transactions is gradually eroding both the dollar's transactional value and its status as the world's reserve currency. Adding his voice to the discourse, tech magnate Elon Musk has been vocal about the reasons behind the dollar's waning global support. Musk argues that U.S. foreign policy is excessively one-sided, often to the detriment of developing economies. He suggests that this high-handedness from the American government is pushing BRICS and ASEAN countries to seek alternatives to the U.S. dollar. Let's get back to the interview.
So when you talk about what does it really mean, it is the beginning of the end of the dollar hegemony or of the dollar supremacy, because I would argue what we've seen over the last several months, Charlotte, that the hegemony of the dollar is gone. Because it's not the only sole settlement currency anymore. We're seeing all sorts of deals being struck in local currencies, as we talked about last time, where China is buying corn and soybeans from Brazil and paying for it in digital yuan, which is then immediately convertible on the Shanghai Gold Exchange into gold. The combined volume of the Shanghai Gold Exchange and the Shanghai Futures Exchange over the last 85, 90 days is up over 200% and has now surpassed the COMEX market in terms of volume of transactions. It's the second most important metals exchange on the planet. So what we see, this little by little by little that I always talk about, logarithmic decay, little by little by little by little by little by little by little, we are chipping away not only at the transactional value of the dollar, as all of these deals used to be in dollars, now they're not, but the settlement status or the reserve status, which has always been U.S. Treasuries, well, we've screwed that one up too because we've weaponized it. And if I don't like what you're doing, Charlotte, you can't use the dollars, but you can, and you can, and you can. And it doesn't matter what we do because we make the rules. That's grown thin, and I think it's a problem. And so by weaponizing the dollar, by doing all of these things, we have pushed this union together where now gold, if you look, not only has it outpaced it over the last 50 years, just now it's outpaced its return, but over the last 25 years, since 2000, gold has doubled the value of the 10-year treasury, the performance, with no counterparty liabilities. So when you see all of these governments buying gold, but equally as indicting is repatriating it, and realize this common settlement currency for all of these transactions in the new BRICS Union, where, by the way, at the end of the Novograd meeting just 2 weeks ago, 59 countries said we're joining, on top of the 10. You're talking the majority of human population. This common settlement currency will disincentivize the need to own and procure treasuries when you can buy gold, which not only has outperformed the treasury market, both over the last 25 and 50 years, doubled it over the last 25, but has no counter liability. And the unit says you can keep the gold within your own jurisdiction. It will be independently audited, better not mess that up, but they don't even have to send their gold. So they don't need to trust one another in the respect it's a cooperative endeavor. And in order for a cooperative endeavor to work, you must perform and behave accordingly, not coercively, but cooperatively, which fosters growth and trust and all of these things, which little by little by little is becoming a real deal. And our Western media, Charlotte, they don't do a bad job of telling us what's happening. They do no job. And so most of the people that we love and care about here in North America have no idea what's coming. And you can't get out of the way of what you don't see coming. So to me, this is the rallying cry. This is what I'm passionate about, is telling people, go to the BIS website, download the Project Enbridge white paper, go to the unit website, read their white paper, 50 pages long, it'll blow your mind, and you'll see that this is a real trend in motion.
Considering the potential revaluation of gold, the evolving global financial landscape, and the actions of economic alliances like BRICS, how do you envision these factors impacting the future of the global monetary system and the role of precious metals within it? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.